I left so much money on the table. So much money. To become a better crypto investor, or really to get better at doing just about anything, you need to focus on two important activities. Number one, you need to commit to learning and improving your skills. But number two, you need to, like every once in a while, take an assessment of your mistakes and figure out ways to avoid them in the future. Recently, I reviewed my failures, my setbacks, and missed opportunities in the crypto space and created a short list of the most important lessons I've learned over the last year or so. And seeing it all outlined has really helped me in shaping my investment strategy in the short run and for the long run, and I know it will help you too. And so I'm super excited to share this with you because bringing to your attention my mistakes in crypto will hopefully help you avoid errors that could cost you money. But something that won't cost you a dime is to hit that like button and subscribe to the channel, because today you're going to learn the actual blunders and mishaps that held me and my portfolio back from reaching our highest potential. Today is all about giving you as much value as possible. So let's jump in. So when I first got into crypto, like most, I learned about new tokens and how to evaluate those tokens by watching some of the biggest influencers in the space. And although that is a good starting point for a beginner, I believe that the best lessons come from hands-on experience. I'm a better investor today because of the choices, the good and the bad choices I've made since the beginning. Basically, I've been to the battle and I have the bruises to prove it. And so I want to share a few stories with you where I do like an over-the-shoulder breakdown of a few cases so you can see exactly plain as day what you need to avoid right now and in the future in the crypto market. And of course, none of this is financial advice. This is just for entertainment purposes only. Great. So the first thing you need to understand is something that I really didn't take seriously, is the fact that Bitcoin moves in a cycle. Now, I heard this at the beginning of my journey and throughout my investing career, but in the past, I never really dug into the crevices of what it meant and how it applies to not only Bitcoin, but the greater crypto market in general. And understand, even if you're not interested in Bitcoin, this still applies because at the time of this video, the market moves in concert with Bitcoin. If BTC is up, the market is up, and vice versa. So this is important to just about every crypto investor out there. So a Bitcoin cycle is defined as a period of time that generally lasts for about 4 years. The start of the cycle is usually marked by a halving event. And if you're unfamiliar, let me explain it by saying this. Transactions on the Bitcoin network must be validated and confirmed by Bitcoin validators. Now, these heroes secure the network and make sure that the transactions processed are legit. In exchange, they receive a reward in the form of Bitcoin. Now, every 4 years or so, that reward gets cut in half. If they were getting 10 Bitcoin before, after the halving, they're now getting 5 Bitcoin. Make sense? So that occurrence, Bitcoin rewards being cut in half, is known as the halving event. And that halving event is what kicks off the Bitcoin cycle. Now, why do we need to know this? Well, because of this. A halving event is immediately followed by a 1-year bull run, then a 1-year bear market, and then like a 2-year period where the market slowly recovers to its previous peak. And so, you got to see this. This is crazy. So Bitcoin's first halving event was November 28th, 2012. And so if you go over to CoinMarketCap and look at Bitcoin from 2012 to 2016, again, that 4-year cycle, you see this. Right here, there was this huge parabolic move to the upside, followed by a bear market decline where, it bottoms out and then it gradually recovers over the next 2-year period, give or take. Now check this out. Here's 2016 to 2020. Look at this. It's the same thing. You see this big parabolic move followed by a bear market and then a gradual move to its last peak. This happens like clockwork. So Bitcoin's last halving event was May 11th, 2020. And so, we could look at the charts, but we all know that we had this massive bull run that ended in November 2021, and now we're in bear territory. And so the big takeaway here is to play the cycle. I wasn't playing the cycle, even though the roadmap was right in front of my face. And that is actually the first mistake I made. Now, currently, we probably have like a few more months at least to this bear market, but even when we begin to recover, don't expect some crazy parabolic move to all-time highs. We probably won't see a Bitcoin all-time high again until somewhere around 2024, the next halving event. So just be prepared. Now again, anything can happen, but it's good to understand what has already occurred historically so that you can make smart moves and protect yourself from being misguided by so-called experts on social media. And that actually leads me to a quick point I want to make. Be careful listening to influencers on social media. In the heart of the last bull run, every influencer on YouTube and Twitter and TikTok were cramming down our throats their end of 2021 price predictions. And although the price points varied heavily, the lowest, the most conservative figure I saw was $100,000 Bitcoin. And you know what? I must admit, I too fell victim to that hope rock they were selling and basically left my guard down as well. But the point being that none of these influencers were talking about Bitcoin cycle and the high possibility we could go into a bear market. What's up with that? Now, another case that I want to show you is with this token right here, Altura. And so let me set this up by briefly sharing something I did right with them. Then I'll explain just a little bit about the project, and then I'll go into the mistake I actually made. So Altura is a very interesting project, and the way I came across them was by using a technique that I spoke about in my crypto research for beginners video. You can check it out here. From time to time, I'll go on an influencer's Twitter account and I'll just check out who they're following. And you know this, most influencers have a huge number of followers, but a small number of followings. So if a project makes the cut and an influencer begins to follow a project, chances are the influencer is thinking about getting in. And so, you know what? That's something I did right. I noticed that a particular influencer began following Altura, and that put them on my radar. Now, what I learned about Altura actually made me incredibly bullish, and it still does. So Altura has created the technology to enable developers to mint, distribute, and transact smart NFTs. And just to sum this up, instead of a static picture like the Bored Ape NFTs, a smart NFT could be like a sword in World of Warcraft, or like basketball shoes in the NBA 2K games, or even like a hammer from Super Mario Brothers. Pretty pivotal, right? So Altura's technology is groundbreaking in the gaming industry, and you can just imagine how massive the impact this project could have on the space. And so here's the mistake I made. I saw Altura as a long-term investment. I still do, by the way. Web3 gaming is here, but it just has so much growth ahead of it. But basically, I jumped into Altura just right around here. This is like the beginning of September 2021, and I bought in at about a penny. And then you can see here, it just went bananas and peaked out a little over 40 cents 2 months later in November. So, at that point, we're talking about a 40x or, a 4,000% return on my investments. You can do the math there. But instead of walking away with my insane gains, that'd be a cool t-shirt. Anyways, instead of walking away massively in profit, I just held. And at this point, I'm still holding. But the reason why I didn't sell is because I had already established a long-term target. And don't get me wrong, this is not the case with every token for me, but I do establish a target, like a long-term or short-term target before I jump into an investment. And I left a ton of money on the table with some of my long-term holds because I didn't take profits when their price pumped earlier than expected. And so the lesson here is to take profits sensibly. I mean, if you're up even a 2x or a 3x, take profits and don't catch FOMO if that asset hits something substantially higher later. I'm sharing this with you, but I'm also talking to myself in this moment. So the last mistake I made that I want to share with you is more of a notable mention because I made the silliest, most beginner mistake. And to be honest, I'm almost embarrassed to even share this with you, but I just feel like you have to hear it. So let's go. You see, in my efforts to earn as much profit as possible, I not only chased winning crypto projects, but I also put some of my long-term holds, like, some of my Bitcoin and some of my Ethereum, and, I put them to work to earn crypto rewards. Now, there are various ways to earn rewards on your crypto, and I feel like I've done probably just about all of them, but I also place my funds with the Celsius network and the Voyager exchange. Now, if you're unaware, Celsius and Voyager both have claimed bankruptcy, both have frozen customers' funds, and with both, it is undetermined if customers like myself will ever be able to recover their long lost Bitcoins. Miss you, Big B. So the mistake here is basic. Very basic. I didn't follow the rule, not your keys, not your coins, which of course refers to keeping your funds in a cold wallet that you control instead of with a centralized entity that believes your assets are their assets. And I'm not completely condemning earning crypto rewards altogether, but I will be taking a smarter approach going forward. The Bitcoin I put at risk, turns out, did not justify the potential reward that I earned. The worst part, that reward is gone too. So over the last year, I have learned many lessons. Although there were plenty of moves I actually got right, I also can now see in hindsight that there are areas I can definitely improve upon. Knowing Bitcoin moves in a cycle is a great advantage to a crypto investor, but an unwillingness to capitalize on the cycle will leave the same investor missing opportunities right in front of their face. And I find it fascinating that as crypto investors, the content we consume and much of the conversations we have throughout social media is focused on finding those hidden gems and, the next coin to explode. But making the right pick is only one part of the success equation. That coin can only be a winner if you take profits at the right time. And keep in mind, although it is easier and probably more familiar to buy crypto on an exchange and just leave it there, every second that passes, you are risking your portfolio to loss. But let me know your thoughts. What mistakes have you made over the last year that you have learned from? Please let me know in the comments. Also, what are some moves that you're making in this bear market to set you up in the bull run? Please also let me know in the comments. And lastly, I want to thank you for your time. Your time is so important to me, so I do hope you found value, and until next time.